Welcome, everybody. Thank you for joining us today. My name is Melissa Atchison. I am the Research and Extension Specialist for Manitoba Beef Producers. I am also a producer myself. We have a cow-calf and backgrounding operation in Southwest Manitoba near Pipestone. We're joined today by Jeff Leegarden with MASC. He is the LPI coordinator, so the Livestock Price Insurance Coordinator. He's been the coordinator for over a year and a half, and he's been with MASC for over 15 years, working on LPI since its launch. He's currently living in Grandview with his wife and 3 boys, and they raise a purebred Angus herd, and he was also raised on a cattle farm. So we're excited to have Jeff here today to kind of dispel some common myths, give us some information on LPI, how to use it, what kind of ways we can use it, especially given the risk and the investment in these cattle these days. I'm not going to wish these prices away, but we have a lot invested in them and a lot to gain and a lot to lose. So really important to try to use all the different risk management tools that we have available to us. And given that the deadline for calf policies is coming up in June, I think it's a great consideration. So Jeff's here to help us navigate the program and learn different ways that we can use it. A little bit of housekeeping. Everybody's on mute. If you would like to ask a question, please raise your hand. So you do that by going down to the bottom of the screen, and there's a little button that says reactions. When you click on that, there's a raise hand function, and we can unmute you to ask your question. Also, you can drop your question in the chat. Happy to answer them from there as well. If Jeff is bringing up any different tools, websites, or anything like that, I'll drop those links in the chat as well. And this webinar will be posted on online on our socials and on our website as well for you to reference after the fact. So we'll post that later with all the different links so you can access all of these different resources and tools. With that, I'll hand it over to Jeff. Thank you for joining us.
Thanks, Melissa. Always a pleasure to work with Manitoba Beef Producers, and especially on the livestock price insurance. Like it said in the intro, I've been doing this thing right since 2014 when it first came out, and been through it all the way along, and happy to be part of this webinar, and it was great to be done. So before I get started into the presentation, I want to let everybody know that this is an open book. This is an open forum, and if you do have any questions at all, stop me or raise your hand or let Melissa know, and we can get those questions out, because that's the biggest thing is it's been a long time of 14 years or 10 years of this being in production, and we're still having a lot of questions, a lot of concerns, and obviously a lot of misconceptions. So for us, we just want to get everybody on board to understand the program better. So thanks again. So yeah, livestock price insurance. We can move to the next slide there, David. I've got him moving it for me. So just a general overview. If you didn't know what livestock price insurance is, or what we call LPI, it has been around since 2014. We break it down into 3 different types of policies you can purchase. The first one is the fed. Fed cattle are considered anything that's going to be finished for kill. The second one is the feeder. Those feeder policies are cattle that have been weaned and are going on feed or going out onto grass. So that's the feeder program with their expiries whenever it is. And then the calf, as a standard, is the wet nose. Anything still on the cow that's going to be coming off the cow, freshly weaned and then sold. So those are the 3 different types. If you didn't know that, that's fine. You can definitely ask more questions. I can answer them now, but I just wanted to break it down to those. Those are the 3 different policies we have to deal with now. So the next slide there, David, is if you were at the Manitoba Beef Producers district meetings, MASC staff were there with a survey card that we were trying to get a better idea of where every producer was at for what was stopping them from buying a policy. So we've just broke it down into 4 different types, and it was, what's stopping you? Is it understanding of the program? Was it cost of the policy? Or was it the process to actually buy a policy? Or was it something totally different? And we received this feedback back, and I've gone through them all and kind of tried to group some stuff. And from there was a fair bit of consistency, but I thought this for this time, I thought it might be the best way to go through and break it down, all four of them, and then go from there to see the understanding and if we can help move you along in your knowledge of livestock price insurance. So we'll go to the next slide, David. So the first one is understanding the program. So LPI offers a premium table every Tuesday, Wednesday, and Thursday. So there's only 3 days of the week that you can actually purchase a policy. And from that, you have your options within it, and it goes out to 36 weeks of expiry. So the first common myth we get as LPI is that a producer has to own the cattle and have the calves born prior to purchasing a policy. That's not true. So if you're a producer that's calving in late May, June, and in February, you see a policy premium come out that you think is a good option for your herd and everything else, but you don't have the calves on the ground, you can go out and buy that policy. No problem. The terms and conditions say that as long as you own the cattle for 60 days within the policy and you have your hundredweight at the end of it, you're in full control to do that. Same as if you have a grasser operation where you put feeder cattle out on grass, and you're looking and you see a policy that would fit really nice protection for you, but you haven't bought those feeders yet, you can do it as long as you own them within 60 days of the policy and you have your hundredweight at expiry. So that's the first common myth. We'll go to the next one. So the next one is if you purchase a policy, you, the client, are locked into that set market price that you bought. Not true at all. Buying an LPI policy only protects you from a downward trending market. So it's like setting a floor price. So whatever it is, as long as the market is above that, you get all that opportunity. The only thing is if it goes below that, you would get the difference. So it's giving all the upswing in the markets you can get. Now, the third one is if a producer or the producer must sell their livestock once the policy ends. Not true at all. You're just buying a policy that the future price is going to be set at that price. You do not have to sell your cattle at all during a policy or multiple policies. You can own these cattle, never sell them till they go right to slaughter. You could actually have a policy for a calf on the same animal. You could then go and buy a feeder policy. And then when they're going to go to finish, you can buy a fed policy as well. So you could have 3 policies on the same animal and never sell them till they actually go to slaughter. Next slide, David. So the second question from the beef producer district meetings was it the cost of the policy that affects people from buying? This one had lots of check marks, and understandably, I totally get it. And it is at times fairly expensive. But if you look at what coverage is compared to other years, maybe it's not that bad of an option. And if we look at yesterday's premium table, just for example, if we go to the next slide, David. So this is the premium table that if you sign up on the LPI website, it's premium and settlements, you can drop down and it says sign up for daily price emails. This is what you would see, and this is yesterday's premium table, or actually Tuesday, sorry. So LPI Saskman premium table for a calf yesterday or Tuesday, the top dollar you could insure your calves for was $4.58 per hundredweight. That premium was $7.90, which seems fairly high if you look at it. That's on 6-weight animals, that's $47.40. Can be considered high. But I want to go to the next slide and give you a little more clarity of how this could look in past. This slide shows on the left side is the premium that was paid. And this is actually my own information. I'm not going to hide the fact I've been doing this thing since 2014. I have bought a policy just about every year since 2014. And I was able to bring it up. So the left side is the premium. The right side is the insured index that I had. So if you, hopefully everybody can see it. If you can't, we'll try to zoom in and make it bigger. But as you can see, yes, the 790 on Tuesdays looks really expensive premium. But when you go down it, you'll actually see several times where I was upwards of $7 or better. And I actually want to highlight one of the interesting things. So I've got 4 highlighted premiums and indexes that go along with that. Those are 4 years that I received a payout from LPI, meaning when we got to the expiry date, the the price from the auction marts was lower than my insured index. So, and the most interesting thing is as we look at 2025's calf premiums, if you look in the middle one or the third one down, I paid a premium of 904 per hundred. So we were upwards of $50+ a calf is what I paid for a 232, which is a $2.32 index. And I think about that. So when you think that 790 on Tuesday was lots for a 458, I paid a 904 for a 232. Interesting enough, that was the most dollar payout I've ever received from LPI. And it was the best insurance I could ever get because that year it just dropped. It was, we had a rallying market, but it was very volatile and we didn't know what was happening. So when I saw the 232, I thought that was great. Boom, I took it. And yeah, in the fall, we had a drop. It rallied back after that year, but when you look at it, it was huge. It was crazy. And obviously it fell into the next year where I paid 468 for a 206. But when you look at it, for the premium you're paying at 790, that's 4740 for a 458. You're at $2,748 for a 6 weight animal that you can protect yourself for in the future. That's clear net after you take your premium out of it, $2,700 guarantee that the market's going to be at in the fall for 6 weights. So that's one of the big things I really wanted to show you that, when we look at the dollars where it is today, and we were in February, we were in the 11 and 12 and $13 per premium per hundredweight, just because of the uncertainty and the risk that the world economy was doing to us. So key things to look at when you're looking at premium and looking at what you're getting for coverage. If we move to the next one there, Dave. Understanding your cost of production falls with the premiums and everything that we're doing. And I find that's the biggest thing when I'm talking to clients is when they say the premium's too much or they'd like a little more insured index and we ask them, what is your cost of production? What is your break even? And thanks to Ben Ham and our Manitoba Ag people, they have these tools for you to use. There's calculators to calculate out your cost of production, but this just shows you at a 450 steer and a 410 what your expected operating ratio is compared to what it's going to cost you and what you got for break evens, margin costs, and everything else. So I wanted to definitely show you this tool so you understand that if you don't know where your break even is, there's a reason why the premium table doesn't just have the highest dollar coverage. It's got different premiums and lower coverages for those that just want to do a break even or a small revenue and not break the bank on premium. But this is definitely a tool everyone should be looking at. If we move down to the next one. So I showed you the calf. I want to show you the feeder one as well. And this one is the one I find that, especially going out to cattle, these feeder cattle could easily be bought and going out to grass right away. And it's, what does a client or a producer want to cover themselves for? What's your cost of, what's your cost right now of those cattle you brought in? And if we look at the top end on Tuesday was 386 and the premium for that was 572. So we were at $3,281 coverage at the top end for $48 premium. So we were netting out at $3,232 for the 1st of September expiry date into these feeder markets. $48 might be lots when, if you look at some of the prices of the livestock that we've had go through here in the auction marts lately, there's been some crazy dollar values on that have been coming through. And this is based on 850 weights. When they expire. So if you got 6 weights or 7 weights, I know we've seen upwards of 3,000. So if you've got a $3,000 feeder that you're throwing out on grass with your cost and your time and maybe even feeding it for a month, that's what it's working out to. If you look way down on this chart, and that's something I wanted to show you, is if you don't like the premium and you don't like your index, let's do a break even. Let's cover your cost to get through this grass year and get to September. And if we look at a 360, which is the second on the 16-week policy, 360 has a premium of 184. So that's gonna on an 850 pounds animal, that's a $3,060 guarantee that is going to be in September on those futures. And that premium is only $15.64. So to cover off your break even and make sure that you're going to make money on your grass and get to the fall, is a $15 premium something you're interested in? Just wanted to put that out for you to think about. So as we move to the next slide, the biggest thing and the reason why we think LPI is something that we really got to look at is the volatility in the markets. And I don't need to tell anybody, we've gone through an election, we've gone through and markets today. If you look at it, where we're at with Saskman and Alberta, and obviously this charts how it's bouncing up and down. And sorry, I just got a notification. Am I back now, Melissa? I just said my Wi-Fi was a little off. So
Yeah, I just that's funny. I was just texting David to say, is this my internet or Jeff's internet? But you're back now.
okay,
Sometimes
perfect.
I would recommend maybe turning off your video to save a little bit of bandwidth and see if that
Okay,
helps.
I could do that. Hide self view, I think.
No, down at the bottom, just where your mute button is, where it says video, you can turn off your video, and that would that generally helps.
There we go.
There you
How's
go.
that?
Yeah,
Okay.
you bet.
So yeah. Anyways, the volatility in these markets from 2024 to 2026 is unheard of. It's all over the map. So is there a time that we've got record prices and everyone's enjoying it and is going to be strong all the way through? Well, sure hope so. But if this is something that LPI can help you protect, give you that peace of mind going through the summer that all the uncertainty politically and everywhere else is covered, this is something to definitely look at. So we can move to the next slide, David. So the third question in the beef producers district meeting survey was the process to do the policy. Is that what's holding you back? So the easiest way to talk about it is there's the three main ways to complete a policy. If you've done a subscription and identification form through the LPI website, you can purchase online at your convenience. All you need to do is log in and have a password. It is very simple. If anybody in your household has ever purchased anything online, shopping or anything, it is that easy to do an LPI policy. And I want to make sure everybody notes it. I highlighted it here to let everybody know. The only time that you can pay for your LPI policy with a credit card is if you do it online when you do that transaction. So I know we get a lot of producers that get the MASC staff or they send in the request to purchase form and then they call me 2-3 days later and say, hey, can I pay this online with a credit card? Unfortunately not. It has to be an online purchase at time of purchase. So the second way you can do it is complete the paperwork, online forms, send it by email to MASC or LPI directly. I would suggest you send it to your local MASC service center, and then we'll forward it on. That way, there's a we can track it and make sure if there's any issues, we can definitely look after any issues for you. And the third way, if you are having troubles with doing anything online or getting the forms printed off or emailing them or any of that, is you can contact your local service center and they will help walk you through it or actually be able to process it and get it you to sign it at a later time. Next slide, Dave. Where do you find the forms? Which I understand is probably one of the hardest things for a lot of people. So on the lpi.ca website, you go to forms, click on the Manitoba flag, which for some was a little hard. Knowing that I'm from Saskatchewan, really originally that was something that was hard for me. But the two forms you need to fill out is the application for identification and subscription. You don't have to be buying a policy to have this in place. I actually really want to make sure everybody understands that if you're ever thinking about doing it, go in there, do the application for subscription and send it off to MASC. That way you would have a login and then the password set up after you do that form that you can go in and do this online at your convenience. And then the other one is purchase claims forms. That's where you can do the purchase cattle. Those are the two places you need to do. All the other ones, the assignment of indemnity or any of those ones are not something you need to do. The only time is if you're asked, maybe for a cash advance, that you have to sign the indemnity and have that form done. But otherwise, if you're just doing it for your own use, for your corporation or partnership or individual, those are the only two things we need done. Next slide. What needs to be filled out? So this is a common myth that we get quite often too is, well, I haven't done my identification and subscription form. I can't buy today. Not true. Now, this is more of a Manitoba not true than everywhere else of all the other provinces, but I'm proud to say that in Manitoba, if you fill out your subscription form and your policy request a purchase form and get it to MASC within not business hours, but from 3:30 till midnight of the day you want to purchase, we will get this done for you. So only in Manitoba, I must say that you can actually do the subscription form and a request to purchase on the same day as you want it, but it will be a paper copy emailed to us. We'll ship it off. It may take a couple of days before you get your statement of insurance, but we will look after it. Next one. Policy payment options. I'd already stated it earlier, but I just want to make sure everyone's aware of it, is the only time you can use a credit card is when you do an online policy, and it must be time of purchase that you do it. And it's quite simply, you check it out, pay for it on card. When you're logged in, everything's good to go. The second way is you can pay by check or online banking within 15 days of your purchase with no interest charge. I must say, online banking with all the different financial institutions sometimes may be a little difficult to get it to go through. The payee is a little tricky with each and every different one, but typically it's your subscription number, and then the payee would be the AAFSC, which is Agricultural Financial Services Corp. Some of the payees also just use corp, not corporation, but you have to type it all out. And then the other option is you can leave it on account in Manitoba for up to 30 days after your policy expires with interest, but that's the options you do have. So you don't have to, nobody has to pay for it at time of policy unless you want to use a credit card. You can use online banking or a check within 15 days or let it go 30 days after your policy expires. Ooh, the next slide. So I don't know if there's been any questions yet, Melissa, but I can keep going. I'll just leave it up to the end unless you do know of any already.
Nothing yet, and David and I will monitor for raised hands. Again, just as a reminder for anybody who joined late, to raise your hand, just go down to the bottom of the screen under reactions, click on reactions, and then there will be an option to raise your hand. Otherwise, open the chat also in the bottom. You can open it and it'll open on a side panel and you can type your chat in there. And I've also posted links to all the things that Jeff is talking about in that chat. So check those out.
Great. Awesome. So if I could get anything out of this presentation today is the takeaways. The number one thing we need to be aware of right now, today, is the deadline to purchase a calf policy is June 12th. The feeder and fed go, if you look, and you can find this on the lpi.ca website. If you go to the calendar, it'll tell you when policies are available. Feeder and fed carry on for most of the year, but calf policies end June 12th. So if you don't have one in by then, you will have to wait till next February to get a calf policy. So, um, and then the next one is, and I talked about it earlier with the feeder table that we talked about is, have you got cattle going out on grass? Have you got a feeder policy yet? When you look at either a break even at a $15 policy or possibly locking in pretty good revenue at a $48 policy, that you better be looking at that before these hit grass on the feeders. And then if anything, there's two things I would love to see everybody do if you haven't done already is the first one is sign up for the premium table and settlements. And that's just right on the LPI website. There's a drop down tab where you just put in your email address and that will get you getting the premium tables every Tuesday, Wednesday, and Thursday. And on Mondays, they would get the settlements, which is huge to stay up to date, follow the trends, follow the markets. And as we've talked about, like I showed you the settlement index. Well, every Monday you would see where these feeder cattle and the fed cattle right now are settling at and how much change there is from week to week. And then the final one is if you haven't done so, go fill out the identification and subscription form and get it back to MASC as soon as possible and give you that opportunity to do an online purchase with a password and login when you want at the ease of it. We all know that this program, our premium tables come out after 3, usually around 3:30 every Tuesday, Wednesday, and Thursday, and you have till midnight that day to buy a policy or you have to wait till the next day. If you have this done, everything working through MASC or doing it online is just that much smoother and we can help you through the process and just make everything within LPI work that much easier for you. You can go to the next slide. So hopefully everyone can see this. More information, contact your local MASC service center or the lpi.ca website. And for anyone that has specific questions, doesn't feel comfortable asking them right now on this webinar, I have put up my information. I will answer calls whenever anyone has, and I will help everyone through it and whenever they can. So you can see my contact, my cell number is typically what's doing. And anytime you have any issues or email me any concerns or questions you have about the program.
Excellent. Thanks so much, Jeff. We do have some questions starting to come into the chat, so we can go from there. Again, folks, drop your questions in the chat or use the reactions button to raise your hand and you can ask it out loud if you prefer that. If you type like my husband with the hunt and peck method, you might be here till Christmas typing your question. So first question in the chat we have from Curtis. What would the best option be for purchasing replacement heifers to breed and sell as bred heifers?
Bred heifers do not qualify for LPI, to be honest. Just feeder cattle.
But open heifers do.
Open heifers do, yes.
Right.
So it is a little bit of a tricky one. We haven't done many audits or anything, but as far as that goes, if they're going on grass as open heifers and going into the feeder market, then your best option would be to take a feeder policy. Bred heifers, like I said, do not qualify for the program, but open ones do. So it's it's one that you can look at for grass, whether they're bred or not, kind of thing, to answer that one vaguely.
Okay, second question in the chat, and you can follow up on that, Curtis, if you want.
Yeah,
Um,
reach out to me personally if you want more detail.
for sure, because you do qualify on the open heifers. Um, We have a question from Ed. When will there be a split premium similar to crop insurance? We buy policies every year at break-even costs. Crop producers get split on premiums. Seems like this needs to be addressed. From guys I talk to, encourage others to look into it. For us, I would buy more and better policies that cover us if there would be a fair split similar to crop producers. I can just speak to that for 1 second on from Manitoba Beef Producers perspective. That is something that our national org, the Canadian Cattle Association, has been lobbying heavily for to government to cost share this premium. And now that it is available across Canada and there are comparable insurance programs for price insurance in the States, there is a compelling argument to have it in Canada. It just has yet to be, um, you know, persuaded, but it is something that is being strongly lobbied for. Do you have
I
anything to add to
appreciate
that,
that
Jen?
question, Ed. Like I really do. And I'm very proud to say that being a part of the beef producers organization and being a member at large and everything else, that I do know there's been a lot of work done with the beef producers and advocating for it. So it's not going without try, and hopefully it happens sooner than later. But yeah, I absolutely understand that concern, and hopefully it happens sooner than later.
Yeah, and I mean there is reasons behind the no, but previously when this was not a program that was available to all Canadian producers, then of course it would not be allowed to have a cost share because it would create unfair advantages across Canada. But now that it's available Canada wide, there's that, and then there's always been a risk of countervail for the U.S. So they also have programs that are similar to this, and so because they have comparable programs, the industry's kind of perception is the risk of countervail is low, not zero, but low, and that is industry's risk to bear. So again, the argument is definitely being made, and it is definitely a strong lobby for cost share premium on this program in Canada. Another question in the chat: how are the prices actually calculated at the end of the policies?
Sure, that's a good question. It's a fair question. And maybe I didn't get into the meat and potatoes of that, but I appreciate the question. So on all of our policies, and basically I'll speak more on the calf and feeder because that's more of the standard that we have in Manitoba, is we take all the auction marts in Saskatchewan, Manitoba, as well as all the direct sales, the DLMS in the DV direct auctions or direct sales, and calculate that out to come up with our settlement index. Part of that too is so on the calf, it's based on 6 weights. So we take any calf that goes through the auction mart that's in more than 1s and 2 lots, meaning they got to be 4 or 5 head per lot or better to be calculated into it. But we only take 550 weights to 649s. So that, when we come to our, and we take the top 15 and the bottom 15% of the calculation out as well. So when we come to our settlements, this is a true mean average of what happened in Saskman. And it's been questioned before where we'll see 1 or 2 auction marts maybe lagging behind. And maybe a producer actually did sell his cattle into that market and said, well, that's not what I got. You got to remember, number one is a policy does not look after your own personal calf sales. It's what the average of all the settlements from all the auction marts and direct sales come up with. So yeah, that's 100%. That's how it's calculated out. So, and we do have standard deviations and also minimum head counts to be part of a settlement. Fortunately, we haven't seen any issues with producing a settlement index on the Monday so far, with most of the weeks. But yeah, that's how it's based. So it is a true average of what's happened in our local markets.
No more questions in the chat, but we'll wait for more to come in if there are any. And again, please raise your hand if you'd rather just do it. We can unmute you, no problem. I do have a question that was texted to me. Will there be a mobile app available to make it a little bit easier and more accessible when you're out and about? Because from what I understand, it's very incompatible. The website on mobile, it doesn't really work that well.
So LPI at the national level is working on revamping its whole new process and new platform. Is it going to be compatible? I don't know for sure. It's in the talks, and I know I've been through some of the identifying the pain points of a lot of the things, and that's been talked about. And I think our launch is hopefully for late next year. But if technology keeps up to where we're at, that would be a hope. And I know we've talked about it on all, even MASC's levels, that we had an app that would work better. So hopefully at this time, I can't say for sure if it's going to happen, but yes, we understand that that is a concern and we're going to try to do our best. So yeah.
Awesome. Thanks, Jeff, for that. Can you speak to maybe LPI and the advanced payments program?
Right. So if you're not in agri stability, you can use the ag or an MASC or sorry, an LPI policy to get into the advanced program. I know we see it on the back end lots where producers have gone for the advanced, they don't have the agri stability, so then they get told they need to have an LPI policy. And typically how it comes into us is I need so many dollars coverage. So yes, hopefully by watching this, you maybe understand a little bit better what you're looking for in coverage wise. But if you do have the LPI policy, then you will be able to take advantage of the cash advance program as well.
Hey, excellent. Thanks for that. So that's, I encourage everybody to talk to the Manitoba Livestock Cash Advance office. I can post their contact in the chat as well. Well, Jeff answers this next question in the chat that says, how are premium costs calculated?
So when we look at the index, premium index, and the premium that's attached to it, there's two components. So the index is based on what the CME live cattle are trading at, the Canadian dollar, and our feed grains. So as I watch the markets somewhat regularly, not because I'm very intelligent on the markets, but I watch to see how it's going to affect Tuesday's price to Wednesday and Wednesday's price to Thursday. And we can start to trend if you watch if the live cattle are trading up. If our Canadian dollar, which has been trading up, not because it's higher, but the American dollar has been losing traction. And then what our feed grains are doing, that's where our index is done. And the premiums are based off of what the cost of those futures are doing and how that's relating, and the volatility of those futures is basically where those premiums go in. So when we see low premiums, we're usually on a trending market with no fluctuation at all. But then if you look at what our settlement spreadsheet that we did and where it's going, the volatility means premiums are higher, obviously. So, but yeah, every day that's why it takes till 3:30. We got wait for the markets to stop trade and then to figure out where they're at for that day to produce a premium table.
Excellent. Thanks for that, Jeff. Brett, if that doesn't answer your question, go ahead and follow up. It seems that we have a hand up, so I will see if I can get this to work. Oops, sorry.
Hi, Mel. Can you hear me?
Oh, yeah, there he is. Oh, Ben Ham, our local risk management and cost of production expert with Manitoba Agriculture.
Yeah, thanks. I just wanted to make a few comments. Thank you, Jeff. That was awesome. We've had a lot of questions that do come in about how LPI works, and do you have to own cattle, how you can relate that policy back to your own operation and when you sell. So I just want to appreciate having those questions and having those answers addressed. I like the one slide you put up on volatility, that one market side that showed the cycle of 2014 to 16. That was a quick cycle. We did have a downward trend very fast after the highs of 2014. So I just encourage everyone to take a look at those charts. They're really good at providing some very good market information. And if you look at those charts, I would say there's tremendous downside risk. We are the highest it's ever been. So if any of you producers out there are worried about that at all, or you're confident that's going to be there, that's up to you. But if you are at all concerned that this may slip away on you, LPI is there for you. I really encourage anyone to take a look at it. There is tremendous coverage right now. The premiums have come way down. You don't have as many days as coverage as you did have if you bought in on February 1st. But really do take a look at it. There is tremendous downside risk, and this program is there. If we knew we had this type of program, BSC, and we had it available to us beforehand, looking back, every one of us would have bought into it. Now we have the program. We are at the high. Are you worried about something happening? And there's so much volatility out there, tariffs, any type of foreign disease, all of this can happen. And just want to make those comments. Great job, Jeff. And yeah, reach out. MASC is really helpful and they answer any questions. Talk to your local agent. They've done a really good job of helping producers walk through this and help them with any issues they've had. So thank you, Jeff. And thank you, Mel, for putting this on.
Thanks, Ben. Ben is a great resource if anybody is looking into risk management programs and how they can work together and complement one another. So I encourage you to reach out to him. It's especially astute on agri-stability and cost of production. So I really encourage you to give him a call if you are wanting to either get your feet wet with those programs or just learn how they might work in your context. It's just important to know on agri-stability, the deadline to enroll has been extended to June, I believe. Ben can speak to that some more, but so yeah, if you've been out of the program for 3 years or you've never been in the program, there has been some changes that maybe make the program a little bit more compelling to you if you're thinking about, risk management and BRM programming, worth looking into. Then for this year, just going back to the advanced payments program, so the Manitoba Livestock Cash Advance, the government has announced that it is $250,000 maximum interest free. So that is, who doesn't want interest free money? I know we take that out every year. What an excellent tool. So all of these things can work together.
Just to add on that, Melissa, sorry to cut you off there. Yeah,
go
the
ahead.
deadline was extended. Anyone taking a look at the program, the compensation rate has gone up to 80%. There are some proposals to go even into 90% because of the volatility and the tariff issues. So really do take a look at it. I think just looking here, July 31st, they are opening it up. So if you're not in the program, that is another one that complements LPI very, very nicely. We've had some really good prices in the background now, so we do have some good coverage going forward. So when this does slip, agri-stability is there to protect you on the long term. So do take a look at that program as well. They do complement each other very well. Thanks for bringing that up, Mel.
Yeah, you bet. And yeah, if you're looking into the LPI program and just maybe want to use it as a price floor to lock in your cost of production, reach out to Ben. He can help you work out your numbers and you can figure out what might work best for your operation. Gives you the coverage you're comfortable with, that's within your budget. So you can use this tool in many different ways, right? You can use it as a price floor. You can take it out on some of your animals, all of your animals. You can get high coverage, medium coverage. You don't have to sell the animals. You can retain ownership. So there's lots of ways to use it, and it's just a really important tool that works with within the realm of all of our other risk management tools. And like Ben said, and like Jeff has said, in this current world we're living in, and we are, when bred cows are selling for north of $7,000, or pairs, sorry, I should say, and lightweight calves are just through the roof. I do think it's really, really important to have our butts covered in this world. I mean, I'm happy for these prices, but I think we need to protect our investment. So I think it's really important. I really want to thank Jeff for being here. I don't see any more questions coming in. We will have this posted on our socials and our website. And I want to say a huge thank you to our communication specialist, David Hulton, who works so hard in the background to make all this accessible and promote it to our producers and our members. In lieu of that, do you have anything that you want to bring it home with, Jeff?
No, I just want to thank Beef Producers for hosting this event and being a part of it, and I'm doing such a great job of promoting everything LPI and beef in Manitoba. So I thank you for that. Absolutely, at any time, if anybody has questions or concerns, go back to the video and see where my contact is. I'll welcome any concerns at any time about the program. So thanks again. I really appreciate everyone that came on.
Thank you. Thanks so much, Jeff. And again, reach out to MASC, check out all the links that I put in the chat, ask questions and see how some of these programs can work for you. We will see you at the next one. Thanks so much. Bye, everybody.